Question 1. Montana-specific homeowners insurance laws. Cancellation, non-renewal, and policyholder rights in Montana. Under Montana law, if an insurer decides to non-renew a homeowner's insurance policy, what is the minimum amount of notice they must provide to the policyholder? A. 30 days. B. 45 days. C. 60 days. D. 90 days. Answer: B. 45 days. Explanation: under Montana insurance law, insurers must provide at least 45 days notice before non-renewing a homeowner's policy. This rule is designed to give policyholders sufficient time to find replacement coverage. Shorter notice periods are only allowed if the non-renewal is due to non-payment of premiums, in which case 10 days notice is required. This requirement is part of Montana's consumer protection laws, ensuring that policyholders are not left uninsured unexpectedly. Question 2, scenario-based. Perils insured against. Excluded perils. Mr. Anderson owns a home in Montana and recently suffered significant damage due to a flood. He filed a claim with his homeowner's insurance company, but it was denied. Which of the following is the most likely reason his claim was denied? A. The damage was caused by an excluded peril under his standard homeowner's insurance policy. B. Mr. Anderson did not notify the insurer within 48 hours. C. Flood damage is only covered if the home is located within a designated floodplain. D. Homeowners insurance policies do not cover any natural disasters. Answer: A. The damage was caused by an excluded peril under his standard homeowners insurance policy. Explanation: standard homeowners insurance policies generally exclude flood damage. Flood insurance must be purchased separately, typically through the National Flood Insurance Program, NFIP, or private flood insurance providers. The claim was likely denied because flood is a common excluded peril under standard policies, regardless of whether the home is in a floodplain. Mr. Anderson's insurer is not obligated to cover flood damage unless he had a separate flood insurance policy. The insurer's duty to pay claims is contingent upon the terms and exclusions in the policy. Question 3. Property valuation methods. Actual cash value versus replacement cost. When a Montana homeowner files a claim for a damaged roof under a replacement cost policy, what is the primary factor that determines how much the insurer will pay for the repair or replacement? A. The current market value of the home. B. The actual cash value of the roof at the time of the loss. C. The cost to repair or replace the roof without depreciation. D. The original purchase price of the home. Answer: C. The cost to repair or replace the roof without depreciation. Explanation: a replacement cost policy pays the amount necessary to repair or replace the damaged property with materials of like kind and quality without deducting for depreciation. In contrast, an actual cash value (SCV) policy would subtract depreciation from the claim payer. Under a replacement cost policy, the insurer is obligated to cover the full cost to repair or replace the roof regardless of its age, provided the homeowner fulfills any policy conditions such as completing repairs or replacements within a certain time frame. This aligns with the principle of indemnity, ensuring the homeowner is made whole without profiting from the loss. Question 4. Risk management concepts. Underwriting and risk selection. Which of the following factors would be least likely to affect an insurer's decision during the underwriting process for a Montana homeowner's insurance policy? A. The proximity of the home to wildfire-prone areas. B. The homeowner's history of filing claims. C. The market value of the neighboring properties. D. The presence of a wood-burning stove in the home. Answer: C. The market value of the neighboring properties. Explanation: in the underwriting process, insurers evaluate risks related to the specific property and policyholder, proximity to wildfire-prone areas, a history of claims, and potential hazards such as a wood-burning stove can all increase the risk of future claims and may lead to higher premiums or denial of coverage. However, the market value of neighboring properties does not directly affect the risk of loss or claims for the insured home and therefore is irrelevant in the underwriting process. Question 5. Montana insurance regulations. Licensing requirements for producers and adjusters. In Montana, which of the following is a requirement for someone applying for a property and casualty insurance producer license? A. Must have 10 years of experience in the insurance industry. B. Must be at least 21 years old. C. Must complete pre-licensing education. D. Must provide a financial statement showing net worth. Answer: C. Must complete pre-licensing education. Explanation: Montana requires applicants for a property and casualty insurance producer license to complete pre-licensing education. This ensures that prospective producers understand the insurance laws and coverages necessary to serve consumers. There is no requirement for 10 years of experience, nor is a financial statement needed. The minimum age to obtain a producer license is 18, not 21, as outlined in Montana insurance regulations. Question 6. Scenario-based. Homeowners insurance policies. Coverage A. Dwelling. Mrs. Thompson's home in Montana was recently damaged in a windstorm. The cost to repair her home is estimated at $120,000. Her homeowner's policy has a coverage limit of $100,000 and includes a 90% coinsurance requirement. How much will her insurer pay toward the repairs? A. $90,000. B. $100,000. C. $108,000. D. $120,000. Answer: A. $90,000. Explanation: coinsurance provisions require the policyholder to insure their home to a certain percentage, typically 80% to 90% of its replacement value. In this case, Mrs. Thompson's policy has a 90% coinsurance requirement. Since her coverage limit is $100,000, she is underinsured as 90% of $120,000. The cost of repairs would be $108,000. Her insurer will pay only a proportion of the loss based on the ratio of what she insured the home for compared to the required amount. Insurers pay money equals insurance purchased required insurance x loss amount equals 100,000 108,000 x 120,000 equals 90,000. The remaining cost will be Mrs. Thompson's responsibility. Question 7. Claims process. Duties of the insured after a loss. After a loss occurs in Montana, which of the following is a key duty of the insured under a homeowner's insurance policy? A. To immediately replace any lost or damaged property. B. To prepare a detailed inventory of damaged or stolen property. C. To settle the loss directly with contractors before filing a claim. D. To wait until the insurer requests proof of loss before taking any action. Answer: B. To prepare a detailed inventory of damaged or stolen property. Explanation: after loss, the insured must fulfill several duties, including preparing a detailed inventory of damaged or stolen property, which helps the insurer assess the claim. The insured is not required to immediately replace property or settle with contractors. Waiting for the insurer to request proof of loss may delay the claim process. It is the insured's responsibility to promptly report the loss and provide necessary documentation. Question 8. Homeowners insurance policies. Coverage E. Personal liability. If a guest is injured on the insured's property and files a lawsuit, what type of coverage under a homeowner's insurance policy would typically respond to this claim? A. Coverage C. Personal property. B. Coverage E. Personal liability. C. Coverage F. Medical payments to others. D. Coverage D. Loss of use. Answer: B. Coverage E. Personal liability. Explanation: personal liability coverage under Coverage E provides protection if the homeowner is legally liable for injuries or damages to others, including legal defense costs and settlements. Medical payments coverage, Coverage F, typically applies to minor injuries without the need to establish liability, but for a lawsuit, liability coverage would be the appropriate response. Coverage C addresses personal property, and Coverage D addresses loss of use after damage to the home. Question 9. Dwelling property policy, DPA 3. Special form. A D3 special form policy typically provides coverage on which basis for the dwelling? A. Actual cash value. B. An agreed value. C. Functional replacement cost. D. Replacement cost. Answer: D. Replacement cost. Explanation: the DPA 3 special form typically provides coverage for the dwelling on a replacement cost basis, which means that the insurer will pay the cost to repair or replace the dwelling with materials of like kind and quality without depreciation. This contrasts with policies that pay actual cash value, which factors in depreciation, or agreed value policies that pay a predetermined amount. Question 10. Unfair trade practices and market conduct. Montana. Which of the following is considered an unfair trade practice under Montana insurance law? A. Denying a claim based on policy exclusions. B. Failing to acknowledge and act promptly on a claim. C. Offering premium discounts for homes with security systems. D. Charging higher premiums for homes in high-risk wildfire areas. Answer: B. Failing to acknowledge and act promptly on a claim. Explanation: Montana insurance law considers the failure to acknowledge and act promptly upon communications related to claims as an unfair trade practice. Insurers are expected to handle claims in a timely and fair manner to protect consumers. denying a claim based on valid policy exclusions and charging premiums based on risk assessments, such as higher premiums for homes in wildfire-prone areas, are acceptable practices. Question 11. Homeowners insurance. Coverage C. Personal property. Under a standard Montana homeowners policy, which of the following types of property is typically not covered under coverage C? Personal property. A. Clothing. B. Jewelry. C. Pets. D. Furniture. Answer C. Pets. Explanation. Coverage C provides coverage for personal property such as clothing, furniture, and jewelry up to the policy limits. However, pets are not considered personal property under homeowners policies and are typically excluded from coverage. Question 12. Montana insurance regulations. Continuing education requirements. In Montana, how many hours of continuing education are required every renewal period for a licensed property and casualty insurance producer? A. 12 hours, B. 24 hours, C. 30 hours, D. 36 hours. Answer B. 24 hours. Explanation. Montana requires licensed property and casualty insurance producers to complete 24 hours of continuing education every 2 years in order to maintain their licenses. This ensures producers stay informed of regulatory changes and industry updates. Question 13. Auto insurance. Liability coverage. Which of the following is not typically covered under the bodily injury liability portion of an auto insurance policy? A. Medical expenses for injuries to the other driver. B. Pain and suffering claims made by the injured party. C. Legal defense costs for the insured. D. Repairs to the other driver's vehicle. Answer D. Repairs to the other driver's vehicle. Explanation. Bodily injury liability coverage provides protection for expenses related to injuries to others in an accident caused by the insured, such as medical bills and legal defense. It does not cover physical damage to property. Vehicle repairs would be covered under property damage liability. Question 14. Business owners policy. BOP coverage. A Montana business owners policy BOP typically provides all the following types of coverage except A. Business property coverage, B. Workers' compensation insurance, C. General liability coverage, D. Business interruption coverage. Answer B. Workers' compensation insurance. Explanation. A BOP generally includes business property liability and business interruption coverage. However, workers' compensation insurance is not included in a BOP and must be purchased separately by employers to cover employee injuries and illnesses related to their job. Question 15. Commercial general liability. Coverage A. Bodily injury and property damage. Under commercial general liability CGL policy, which of the following would not be covered under coverage A? A. Damage to a customer's property caused by the insured's negligence. B. Bodily injury to a customer at the insured's business premises. C. Injuries to the insured's employees. D. Third-party claims for property damage caused by a defective product. Answer C. Injuries to the insured's employees. Explanation. CGL coverage protects against claims for bodily injury or property damage to third parties due to the insured's operations. However, injuries to employees are excluded and are typically covered under a separate workers' compensation policy. Question 16. Homeowners insurance. Exclusions. Which of the following events is typically excluded from coverage under a standard homeowners insurance policy in Montana? A. Damage caused by a burst pipe. B. Fire damage. C. Flood damage. D. Wind damage. Answer C. Flood damage. Explanation. Standard homeowners insurance policies generally exclude flood damage, which requires separate coverage through a flood insurance policy. Damage caused by burst pipes, fire, and wind are usually covered under a typical homeowners policy. Question 17. Scenario-based. Commercial property insurance. Coinsurance clause. ABC Manufacturing, located in Montana, has a commercial property insurance policy with a building insured for $200,000 and a coinsurance requirement of 80%. After covered loss, it was determined that the building's replacement cost is $300,000. If the company suffers $90,000 in damage, how much will the insurer pay under the coinsurance clause? A. $60,000. B. $67,500. C. $72,000. D. $90,000. Answer B. $67,500. Explanation. Under the coinsurance clause, the amount the insurer will pay is based on the ratio of the amount of insurance purchased to the required amount. The required insurance is 80% of $300,000 or $240,000. Since ABC Manufacturing only purchased $200,000, the insurer will pay $200,000 to $140,000 x 90,000 $67,500. The remaining amount is the policyholder's responsibility. Question 18. Montana Auto Insurance. Uninsured underinsured motorist coverage. What does uninsured underinsured motorist coverage protect against in Montana? A. Damage to your vehicle caused by a hit-and-run driver. B. Bodily injury to you caused by a driver who lacks sufficient insurance. C. Damage to another person's property for which you are liable. D. Comprehensive damage caused by theft. Answer: B. Bodily injury to you caused by a driver who lacks sufficient insurance. Explanation: Uninsured underinsured motorist coverage in Montana protects the insured from bodily injury caused by a driver who either has no insurance or does not have enough insurance to cover the full extent of damages. It does not cover property damage or comprehensive losses like theft. Question 19. Montana Insurance Regulations. Claim settlement practices. In Montana, which of the following actions is considered an unfair claim settlement practice? A. Promptly denying a claim after determining it is not covered. B. Settling a claim for less than what is owed based on policy provisions. C. Offering a settlement that matches the cost of repairs for a covered loss. D. Providing a written explanation for denying a claim. Answer: B. Settling a claim for less than what is owed based on policy provisions. Explanation: In Montana, settling a claim for less than what is owed without a valid basis is considered an unfair claim settlement practice. Insurers must handle claims in good faith and in compliance with the terms of the policy. Prompt claim denials with proper reasoning and fair settlements based on actual costs are permissible. Question 20. Montana Workers' Compensation. Employer obligations. Which of the following is true regarding workers' compensation insurance requirements for employers in Montana? A. Only employers with more than 50 employees are required to have workers' compensation insurance. B. All employers are required to provide workers' compensation coverage regardless of the number of employees. C. Workers' compensation insurance is only required for hazardous occupations. D. Employers can choose to opt out of workers' compensation insurance. Answer: B. All employers are required to provide workers' compensation coverage regardless of the number of employees. Explanation: In Montana, all employers, regardless of size or industry, are required to provide workers' compensation insurance for their employees. This ensures that workers injured on the job have access to medical benefits and wage replacement while recovering. There is no opt-out provision for employers. Question 21. Montana Auto Insurance. No-fault versus tort system. Montana operates under which system for auto insurance claims? A. No-fault system. B. Pure tort system. C. Modified no-fault system. D. Personal injury protection (PIP) system. Answer: B. Pure tort system. Explanation: Montana operates under a pure tort system, meaning that the driver who is found at fault in an accident is responsible for covering the damages. Unlike a no-fault system, injured parties must pursue compensation from the at-fault driver or their insurer. Question 22. Homeowners insurance. Coverage D. Loss of use. What does coverage D. Loss of use in a Montana homeowners insurance policy typically cover? A. Damage to personal property caused by a covered peril. B. Additional living expenses while the home is being repaired after a covered loss. C. Medical expenses for injuries to guests on the property. D. Legal defense costs in case of a liability claim. Answer: B. Additional living expenses while the home is being repaired after a covered loss. Explanation: Coverage D. Loss of use provides coverage for additional living expenses if a covered peril renders the home uninhabitable. This can include hotel stays, meals, and other living expenses while repairs are being made. Question 23. Montana Insurance Regulations. License renewal. How often must a licensed property and casualty insurance producer in Montana renew their license? A. Every year. B. Every 2 years. C. Every 3 years. D. Every 5 years. Answer: B. Every 2 years. Explanation: Montana requires licensed insurance producers to renew their licenses every 2 years. The renewal process ensures that agents remain in compliance with state regulations and complete the required continuing education. Question 24. Commercial property insurance. Business interruption. Which of the following events would typically trigger coverage under a business interruption insurance policy? A. A company loses a major contract with a supplier. B. A fire damages the business premises, causing the business to temporarily close. C. The business suffers a loss due to market fluctuations. D. The company experiences a data breach. Answer: B. A fire damages the business premises, causing the business to temporarily close. Explanation: business interruption insurance covers lost income and expenses when a business must close due to physical damage caused by a covered peril, such as fire. It does not cover losses from market conditions, contracts, or cyber incidents unless specifically endorsed. Question 25. Montana Workers' Compensation. Exclusive remedy. Under Montana workers' compensation laws, what is meant by the term exclusive remedy? A. Employers can only be sued in criminal court for workplace injuries. B. Workers cannot sue their employers for workplace injuries if they are covered by workers' compensation. C. Employers must provide only medical benefits to injured workers. D. Workers may only receive compensation if they are found to be at fault. Answer: B. Workers cannot sue their employers for workplace injuries if they are covered by workers' compensation. Explanation: in Montana, workers' compensation laws provide an exclusive remedy, meaning employees give up their right to sue their employers for workplace injuries in exchange for guaranteed medical and wage benefits. This system protects both employers and employees. Question 26. Montana Auto Insurance. Personal Injury Protection (PEP). Does Montana require personal injury protection (PIP) coverage in auto insurance policies? A. Yes, for all drivers. B. Yes, but only for commercial vehicles. C. No, Montana does not require PIP coverage. D. Yes, but only for high-risk drivers. Answer: C. No, Montana does not require PIP coverage. Explanation: Montana does not require personal injury protection (PIP) coverage. Instead, the state follows a tort system where drivers are required to have liability insurance to cover damages they cause to others in an accident. Question 27. Scenario-based. Homeowners insurance. Dwelling coverage. Megan owns a home in Montana insured for $250,000 under a standard homeowners policy. A fire destroys her home and it is determined that the replacement cost is $280,000. How much will the insurance company pay for the damage to the dwelling, assuming full replacement cost coverage? A. $250,000. B. $280,000. C. $230,000. D. $0. Answer: B. $280,000. Explanation: if Megan's policy includes full replacement cost coverage, the insurer will pay the full amount required to replace her home, which is $280,000 in this case, even though her policy limit was $250,000. Full replacement cost policies ensure homes can be rebuilt without depreciation affecting the payout. Question 28. Montana Insurance Regulations. Unfair trade practices. Which of the following is considered an unfair trade practice under Montana insurance law? A. Denying a claim with a valid reason and documentation. B. Failing to promptly acknowledge and act on claims. C. Offering discounts for bundled insurance products. D. Conducting a thorough investigation before paying a claim. Answer: B. Failing to promptly acknowledge and act on claims. Explanation: Montana insurance law considers it an unfair trade practice for insurers to fail to promptly acknowledge and respond to claims. Insurers are required to handle claims in good faith and in a timely manner, ensuring policyholders receive fair treatment. Question 29. Montana Auto Insurance. Property damage liability. Property damage liability coverage in Montana auto insurance policies provides coverage for A. Repairs to the insured's vehicle. B. Repairs to the other driver's vehicle when the insured is at fault. C. Medical expenses for the other driver. D. Injuries to passengers in the insured's vehicle. Answer: B. Repairs to the other driver's vehicle when the insured is at fault. Explanation: property damage liability covers the cost of repairs to another person's vehicle or property when the insured driver is at fault for an accident. It does not cover the insured's own vehicle, which would require collision coverage. Question 30. Montana Insurance Regulations. Surplus lines insurance. Which of the following is true about surplus lines insurance in Montana? A. Is available only for risks that cannot be covered by admitted insurers. B. It is regulated in the same way as admitted insurance. C. Surplus lines insurers are required to follow Montana rate regulations. D. It cannot be purchased by commercial entities. Answer A. It is available only for risks that cannot be covered by admitted insurers. Explanation: surplus lines insurance is a type of coverage available for risks that admitted insurers are unwilling to insure. These insurers are not subject to the same rate regulations as admitted insurers but must be authorized by the state to offer surplus lines policies.